Finally, there's a nuance to original issue discount and original issue premium accounting, and that is the deferred taxes that emerge as a result of these. So understand that while amortization expense from OID reduces GAAP taxes over the term of the borrowing, we are recognizing, of course, amortization expense, which will lower your GAAP taxes because it reduces your pre-tax income. But it doesn't actually reduce the real cash taxes until the redemption itself. For tax purposes, the only deduction occurs upon redemption, and the deduction is recognized as a loss on the extinguishment of debt calculated as the original issue discount price minus the redemption price. The reverse, of course, happens with original issue premium bonds. The negative amortization increases GAAP taxes over the term of the borrowing, but not actual taxes. For tax purposes, the incremental taxes for OIP are only recognized upon redemption as a gain on extinguishment of debt. Again, the opposite of what we just talked about. So it's going to be the OIP price minus the redemption price. This temporary timing difference leads to the recognition of deferred tax assets in the case of original issue discount bonds and DTLs in the case of original issue premium bonds, which is reversed upon redemption. And now we can get to the final exercises. So for each of the prior three exercises where we had gone through the accounting for an original issue discount 0 coupon bond, an original issue discount with a 5% coupon, as well as an original issue premium with a 5% coupon bond, I'd like you to answer the following, to fill in the blanks for the following. What is the GAAP tax expense, which we've already identified in the prior three exercises? But then specifically within the GAAP tax expense line, what portion of the GAAP tax expense line is comprised of cash taxes that are due during the period, as well as what portion is related to deferred taxes created in the period. And more importantly, I'd like you to also identify what is the impact on the balance sheet of the deferred taxes that are created in each one of these exercises. Is there an impact to deferred tax assets, and what is the end of period balance of that, as well as deferred tax liabilities? I'll give you a hint. One of these three creates a deferred tax liability. The other two create deferred tax assets. And trying to understand, incorporating the deferred tax concepts that we've introduced in prior videos and now combining them with the accounting for original issue discount and original issue premium enables us to understand not only the basic accounting for original issue discounts and premiums, but also what's happening to the deferred taxes associated with them. So this is a challenging exercise. I recommend you go back, if you created the Excel files for the original exercises, to use those Excel files and actually build up a deferred tax asset calculation, deferred tax asset liability calculation, to do this all via Excel, because there are a lot of we're at a point now where there's actually a lot of moving pieces. So trying to do this with pen and paper might be a little bit more tricky than just using Excel. So hit the pause button, give this a shot yourself, and if you're struggling, just hit the unpause button and we'll go through it together as a group.